This is Justin Amazon for Tuesday, July 9th, 2019. So I'm starting this video out a little bit different. I turn off prices. I'm showing them as percent. I'm not even sure why the percent is on here the way it is. It must be looking back at how many days of data I've got on here. 20 days. So maybe it's in the last 20 days. It's at 7% or something. I don't know. But I was just looking for a way to just kind of ignore price and just look at a couple things. The main thing being candles. So let me draw what I saw right out the gate here. You could have set up a trigger to get in and a stop right there. And that means you're in on this candle. Or if you had a little bit higher or raised it, you could be getting in on any of these lows in here and a stop down here, which as soon as this breaks out, you can pretty easily move your stop here. It rests a little bit, S curves, continues. Then you can move your stop up to right here, and then right here. This thing just keeps on going and runs right up into some line here that we have as a resistance and support. And look at that, nice hammer right here. It continues. There's no signal to like even get out there. It just keeps on going. So you just keep moving your target away. Or you just lock in gains when you get there. Here's your stop. Here's your stop. Oh, that's a bad line. There's your stop like that. This continues up. And it's up here. It's like, okay, is it really going to go that way? No, it goes that way. But at any point in here, it's like, okay, I've got my stop here below hammer. Even if we do something like this, come down here, it's a good place for it to stop. So keep your stop here for a little bit. Maybe after half an hour goes by or something, you can probably inch it up a little bit more and a little bit more. And then it does this. Another, oops, what happened? Something turned off. That's strange. It switched back to mouse. Okay. I'm trying to draw. There we go. Okay. S curve here. At this point, it starts to go up, up. So you can bring your stop right up here, then right up here. It comes right into, okay, it's got the high price on there. I couldn't get rid of that one. 1990.01. I'm guessing that line is at 1990. Actually, I know it is. And I know this line is at 1972.50. Anyway, we run into that beautifully. And I have horror. All right, we are getting rid of that. That is a really, really amazing resistance right here. And I can't even draw a straight line. So I hope you're laughing at that. We just kept on running. And all the while, you can just be trailing your stop up all day long. This could be a target here. Look for it to break out. It doesn't. Your stop could literally be right here at the 21, and then you get stopped out, or trailed out, rather, with a really, really nice gain. Okay, that's just looking at the candles. Let me see. How did I do this? Did I turn off? Something's not cooperating. Oh. Okay, now I don't remember how to get the price back. It's right here. So this one? Oh, there's something right here. All right, I'm gonna have to figure out how to do that. I still, no, I'm in here. I'm back in the chart. Okay, why is it not cooperating? I want to turn my prices back on. There we go, show prices percentage. There we go, okay, back to numbers. I like having numbers. Yeah, really nice hammer. We just ran. There was a nice consolidation. This is the most bearishness we got all day. 3 bearish candles in a row. They actually, let's see, the low to the low to the low. They actually made higher lows, just like we've been doing on the daily. So here we are on the daily, continue to make higher highs, making some lower lows. But I was liking this candle, obviously, making another new high, taking out this high. What I really liked is the S curve here looks really similar to this one here. And this candle looks really similar to the candle we made today. Slightly lower volume here. We're at 4.3 million. We're at 6.5 million, but 3 candles later, we were making an all-time high. And I'm not saying 3 candles later, we're going to be making a new all-time high, but we're a stone's throw away. I mean, it's $60 away to being at the all-time high. Today, we had a move of 46.54. So it's not out of the question that we could just keep chugging along and I don't want to say this week get there. Next week, maybe get there. If we hit this, X marks the spot on the 16th, what is that, next Tuesday? That'd be really cool. I don't know if that's going to happen, but nothing is really slowing this down. Even some really strong, bigger bearish candles, this resistance here didn't slow it down. I mean, it slowed down a little bit, but it's, yeah, I hope you're in bullish. If I zoom out a little bit on this, you can see right where we opened up. We opened up a little bit below yesterday, really came back into some of the lows that we were seeing in here. What's even better than these lows is if we jump over to the 2000 call, and the low we put in at the open is pretty much the lows we had all day long after 9:30 on the 2000 strike option expiring this week. And what's really cool about that is it just shows a really nice support. And 150 would have been a great stop, which means then 250, a dollar higher, could be a really nice entry. And it was 245 here, 255, 254, 246. You could have set up 250 by 150. I don't know for sure if it would have filled, but that would have been a great setup. And that was really getting in on either the hammer or on those 3 pennant bearish candles, high wave bearish candles, but even this one was a bullish candle. After those, on the 5-minute, we just kept going up. Actually, let me zoom back out to this, sorry. So we got above, we were just basically showing some indecision right here on yesterday's high. And then we broke out. Even when we broke out and then did another triangle here to consolidate, the option pulled back a lot. Actually, the option lost a lot of premium here. And honestly, you could have easily been setting up 3x2 right here, for about 45 minutes, probably been able to get in at that price before it just took off. Let's say you were in at 250 and you're looking for the 1970 250 price as a target and you want to get out right there as it crosses it. Well, that was this candle at 1025. So pretty much $5 would have been your exit. 250 by 150 up to $5. That's a double in the option. That's 2.5 R. But you didn't necessarily have to have that as your target. If it was, great. That's a good plan. That worked really well. But at this point, it's like it ran up to 550. That would have been 3R. If you just want to lock something in and you don't want to lose you don't want to lose more than, let me say it again. You want to keep 2R of whatever, wherever it goes. So you move your stop up to 4.5 or 450. So that's, 250 up to 450. That's 2R. Your stop's right here. And now it is right on the low. If you're a little, if you're a little bit open to that being, close to 2R, you can move your stop down to like 425. And then as soon as you get something like this where it bounces, then get it up to 450. But if you had just been trailing, after it made a high, you just trailed below it by, I guess in this case, it'd be an R and a half to be at 450 or 2R. 2R would be down here. I guess if you're just trailing candles is a better way to go. Nice little one here, stop at 3. After that one comes in, continues up, makes this massive one. You get your stop right below that one, pulls back here. Maybe you got aggressive and put your stop right here at 5 and you got stopped out. If you're a little more cautious after this big candle, waiting, half an hour, you would have moved your stop up to probably 450. After it moved up some more, pulled back with bearish candle. You get your stop up here at like 550 or 6, and you just trail your stop up all the way. And then what's pretty crazy is this move here at 11:45. This was 11:45, where we came up here, started to roll back down, didn't even touch the 21. We touched the 21 at the open, and then at the close. That's pretty much all we did today, is just stay above the 21 and just keep running. But right here, pulled back a little bit more and then ran up, and with a nice inverted hammer, hit the 1990 price. Back over here, the option. So this would have been a great place to be exiting some, or this candle would have been scaring some people out. And had you been just trailing your stop, I mean, you're fine here at 850 still. If you moved it any closer, there wasn't really any bearish candle to move it below. You know, bearish candle here, you're at 3. Bearish candle here, you're at 450. Bearish candle here, you're at 6. Bearish candle here, okay, I'm going to give this a, maybe 7. And it came right down to 7. So I don't know if that would have stopped you out, or if it would have left you in, and then you didn't move it again until you're up here. But up here you're getting above this high, so you're probably getting out at 10. So you got in at 250, you get out at 10. That's 7.5 R. That's pretty good. That's really good. And it hit a target, the next target. The next line, I don't remember the last time we were up here. Doesn't show up here. And I just zoomed away from it. Let me do that again. Okay, the next line is 2013. And then, why is this? I can't highlight that line. That one's 2013. I want to say this one's 2005. Don't remember now for sure. I think it's 2005. And then the next one after that is 2025, 57. The next one after that is the high at 2050, 50 cents. So, I mean, 2000 is the next real number to hit if we continue up. If we pause a little bit, get some inside candle, pull back to 1972.50, that's a great place to turn a stop to if you don't want to lose much of this gain and you're looking for a swing. Don't be bearish up here, not yet. This is a really strong move. The close and the high are within $2 of each other. So the low and the open were $4, about $4 apart from each other. But anyway, it's a really strong candle. It's a Marbozu type candle. It's got a small wick on each end, so it's not really a Marbozu. Similar to this kind of candle here, where it just shows this thing continuing, and it's really strong. Bullish volume has been increasing from the holiday, or the half day before the holiday, and then this is just additional confirmation that this is the right direction. Bullish is the right direction. This is the largest volume we've had in a few weeks, actually a month, going back to June 11th, and almost a month, because June 10th would be a month, but or the 9th. So highest volume in about a month, showing definite conviction in going this direction. And like I said, there's not many people selling in all of this, mostly bulls. When you zoom out at kind of 5-minute candles like this, you can, well, not zoom out, I guess I'm zooming in, you can see, okay, this has more bearishness than bullishness. This whole triangle, there's a little more bearishness than bullishness, and then you have a lot more bulls, and it's just the color. This looks a lot more green, this looks a lot more red. And you can do it again here. Well, green and red intermixed. This is the half day, slow. Okay, here's a lot of red over here, and then after that, not a lot of red. I mean, a little bit here, a little bit here, a lot more here. That's why I went sideways, but it's just a whole lot more green. It just, your eyes kind of just get used to it. It kind of pops. For this, there was actually a pretty good mix of red and green through here. Oops. Not what I meant to do. A lot of red and green all through here, but the morning and then after this, we just ran with some green candles. We actually had conviction in the direction we're going. And then you got today, where you had very few bearish candles and just a whole lot of buying, pushing this thing up. Like I said, 3 was the most in a row. 2 here, 2 here, 2 here, 2 here, 2 here. the bears could only get the selling going for 10 to 15 minutes. That was it. Obviously, there's some upper wicks, but the candle was still bullish. So that's kind of how I'm looking at this. I mean, it's not even worth looking at the puts. You could have done a different option. The 2000 was a nice round number. Plenty of time left on the week to have that just be a day trade. And if you did the 1975 strike, started with it being a little more expensive. That opening candle, was a $1.65 range. Then it gapped, and so in here you probably would have needed to do like 8x6, 8x7, maybe over here. With some smaller candles here getting in, probably getting in like 850 by 750 over here. But as this is forming, that last high wave candle could have been getting in above that. That would have been like 750. No, 750 by 650. Something like that, maybe, because the high here was 747. So getting in above the high, but that's really tight. It probably would have been more like 8 by 650. That's a bummer. So, the 1975, you have plenty of time through all this to be like, okay, I'm going to wait for a pullback. Here's my pullback. Here's my S curve. I'm going to get in at 8. And what's it do? It gets almost to 24, which would have been a triple on the option price. But going from 8 and holding on until it got to, let's say 20. Let's just be conservative at 20. For 8 to 20, that's 12R. I take that. That's nice. I just had a harder time setting the $100 risk down here. You would have had to have waited for this, which wasn't that big of an issue to wait for this to play out. It just feels like after this much of a move, you could be missing out, or you could be getting stopped out if it pulls back a little bit more. And I guess the only thing to say is about that is we're staying, we're following the 5. We've got really good bullish volume. And so looking for a pullback as a retest, you could have maybe half of your R down here and the other half just getting in right here, and looking for it to continue. That's kind of one way to set it up so that you get in some, when it's forming, you get in a little bit more if it pulls back. If it doesn't pull back, you got half an R to ride, and then you set your target accordingly. And there's other ways to break it up, but doing thirds or something, but it's a good way to get in and be a little more conservative with the setup. And that way you're in the trade. You're not necessarily missing something, just waiting for a pullback. Which a lot of time what I'm looking for, waiting for that pullback, looking for that retest, getting in at the low, and it just doesn't happen a lot. Occasionally happens, very rarely. 1975 puts, they just lost value all day long. Into close, maybe a little bit of something going on, but I mean, that was just this little dip or right at the close. But this was mostly a bullish move for the first 4.5 hours, and then the last 2 hours were just sideways. Just about 4 hours, a little bit more than 4. So we'll say 4.5 hours are just going bullish, and then the last 2 hours are just sideways. So really good day to be a bull, really good day to just hold on to anything you're long, and just wait for the stock to play things out. So as we sit right now, we got 5 bullish candles in a row. We've done that here with 6. We've moved a lot more with these, and we could totally continue. It does not have to stop here. People could be taking profit, but other people are going to be coming in and thinking that they missed it. And so this could definitely continue up. I think we need a little bit of a rest, even if that means a rest or a slight pullback. Just looking at back here, and let's look at this a little closer here. So we rallied from a low, S-curved, and continued up to all-time high. And that's kind of what I'm seeing here is we rallied from a low, S-curved, and continued not quite to an all-time high, but we're getting there, pretty close. So yeah, good move today, and we're back tomorrow to see how things continue or just how the day ends up. So be careful in your position sizing. Know what you're risking tomorrow, because after such a strong move, You know, if we just get a calm, quieter day and you're going directionally bullish, it might not work out. If we do go directionally bullish, you know, just be ready to get in there on a retest or on something sideways. Maybe we'll come back and if we were to gap up, maybe come back, touch the 21, touch the 1990 price, and then S curve off of that. Similar to here, you know, let's say this is one day where we rallied, gap up, gap down a little bit, or well, I guess we gap up, and hold them like we did here, hold 1990 like we did with the 1925, and then rally off that. That could work. We could pull back a little bit more and get a bounce off of 1972.50. That's totally fine. This is definitely a bigger conviction move than we had here or after hours here. You know, this is the biggest move, so this could also be you know, kind of the last buying on some sort of wave count here. And I'm not great at counting waves, but maybe we had like a, now if this was a 5, then this would be a 4, but this doesn't really work for a 4 because it's still making a high. Yeah, I'm not really sure how to count this, so I'm sure somebody else with better counting skills than I do could do that. And yeah, I know there's a triangle here. There's a bit of a triangle here, so that, but that doesn't mean 4 is here and 5 is here. That doesn't make sense. So I'm not really sure how to count this. So I probably have to take a step back and look at a little bit larger time frame to do a little better than a 5 minute. And I did make sure I was in the 5 minute today before starting. So hope this helps and this makes sense. And like I said, I'll be back tomorrow with another review of how things moved. This is Justin AMZN. Thanks.